Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Tuesday. In today's program, I want to have a little chat about how OPEC has weighed in to give oil a little bit of support, poor oil, plus some couple other developments happening in the market. And yes, there is a small thing in reference to Tesla and Twitter I want to talk about as well. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So basically, OPEC, or OPEC Plus, I should preferably say, is stepped in to rescue oil, because oil, as we know, has been under pressure for the last 4 trading sessions. And in fact, on the back of a report, which I'll talk about again in a minute, oil actually hit a yearly low yesterday. Now, obviously, what's been pressurizing oil is obviously the concerns over more lockdowns in China. Don't forget, they've had a big surge in their COVID cases over the last couple of days. In fact, they recorded their first death in 6 months because of the virus. And we all know that China has a zero tolerance policy when it comes to COVID. So they've been in lockdown for the majority of this year. So again, the threat of them going on a lockdown again is giving a lot of risk off type appetite. And obviously, China is the world's second biggest economy. So they go in lockdown. The demand for oil is beginning to wane. So this is really what's been pressurizing oil over the last couple of trading sessions. But like I say, the report I hinted at earlier on, there was also a report which was leaked, I believe, by the Wall Street Journal that said that OPEC Plus was considering increasing production, which of course, again, there you go, you got the double whammy, increased supply and falling demand. So this is why oil has been under pressure. However, they didn't hold back. OPEC has rushed out and confirmed and denies that any thoughts of increasing production. So they're denying this is even on the table. So this is what sort of basically helped oil and stabilize. Let's have a quick look at oil at the moment before we talk about something else, which has had a knock-on effect because of this. As you can see, now let's see, this is a 130-minute chart. As you can see, this here happened yesterday when the report leaked out that obviously OPEC was considering increasing production. Then, like I say, OPEC Plus is weighed in and it basically gave it a boost back up again. Actually fell, like I say, to a yearly low, below $75.57 a barrel. It's since recovered to that because of OPEC. It's currently trading now back to $80.26 a barrel. So again, like I say, we've had 4 trading days of losses for the black gold. It now looks like it is actually trying to stabilize at the moment because of OPEC. So that's helped it. It hasn't changed the whole general feeling because everybody's still concerned very much about what's happening in China. But for now, it's given it a bit of a respite. So that's what's happened there. But it wasn't just oil which benefited from this. Oh no. FTSE 100 has actually jumped to a 2-month high on the back of this oil story about OPEC's weighing in. Because don't forget, part of FTSE 100 is 2 major oil producing companies, Shell and BP, British Petroleum. Both went up. Shell jumped up by 2.9% and BP actually was up by 4.8%. Now, don't forget, both these companies have experienced absolute stellar profits so far this year. Stellar profits. And BP, actually, their status was actually raised to buy from neutral by Citigroup. And they generally think that BP will continue to actually potentially grow and go higher this year. So let's have a quick look at BP, actually. Obviously, it's not trading at the moment, but let's have a look. Let's pull it up and see where it is. Where did I put it? Hang on, give me 2 seconds. There it is. Okay, so you can see it's been obviously choppy like everything has in the market. This is on a daily. It closed yesterday at $33.07. So it did close with a gain yesterday. And like I say, Citigroup believes this will continue potentially for BP. Like I say, it's been trading, how many months now? That is like since June 2020. You can see it's been trading almost around about 2-year highs. Over 2-year highs since June 2020. So yeah, that's performing very well. But like I say, a lot of these oil production companies would be, because obviously the price of oil this year has really helped, and supply concerns as well has really driven it. Something else which is benefiting today, or looks like it's trying to bounce back today, and that's gold. Yes, my beloved yellow metal. It's trying to bounce back as well, having suffered 4 trading days of losses. The main reason for this is today we are seeing a weaker dollar. We are seeing a weaker dollar currently at the moment. And this is really, again, same old story why we're seeing this, though, is because we had a few Fed members speak, Daly and Mester, sorry. Now, again, the market has a short-term memory. It really, really does. Now, both Daly and Mester have said that they have hinted at a slower pace of interest rate hikes, okay, which, to be honest, we already assumed the next month in December, the rate hike by the Fed is going to be 50. Don't forget, they've done 4 75s. So we've already anticipated that. There's been enough hints about this as well. And as well as that, there is anticipation that in January they'll do 25. So this is nothing new to give us a bit of hope. What really is the matter is where they stop. And, general consensus, again, is they're not going to stop, after January. They're going to go further. So don't forget, Bullard, last week, he said that he thinks interest rates in the US should be between 5% and 7%. So I don't get where, a few people are hinting again, a slower rate hikes can suddenly get a boost because it's the same old story. But anyway, let's have a quick look at gold and see where gold is as well at the moment. It's currently trading at $1,747 an ounce. So it is up today. So if you have a look, again, it's like oil has experienced 4 trading days of losses. I personally think the next real obstacle for me, if I can look at a potential area of interest, will be $1,758 an ounce for this yellow metal. Yeah, that's exactly what I was saying. They denied the report. They would basically, though, they said they won't increase it. Don't forget, they increased it. They reduced it just over a month ago. Even though they decided to increase it, thanks to Biden, by 100,000 barrels, they then went back on that and decreased it, which realistically, the reduction worked out about just under 1 million barrels a day. So they're not going to, because they want to stabilize oil prices. They don't want lower oil at the moment. That's my thought to that. And that's why they're doing it. They want to keep oil prices around 80 and above, because let's face it, like I say, like Shell, BP, and all these other oil production producing companies, the OPEC nations have also made a big amount of money this year. So they've done very, very well. But that's a really good point, my friend. A really good point. So basically what I'm seeing potential area of interest with gold, $1,758, followed by another potential area of interest, $1,780. We can see a weaker dollar across the board today in general. The euro is looking like it's got a day of gains ahead of it, currently trading at 1.02735. It's had 3 days of losses against the greenback. The British pound, the good old cable, British pound, US dollar, pretty much the same, not as dramatic. It's been very range bound ever since, obviously, the UK government released its new autumn statement, which includes tax increases and cuts in government spending to try and fill that 50 billion surplus in the 50 billion fiscal hole they've got to try and fill and try and raise for. Currently at 1.18532. And finally, let's have a quick look at the dollar yen again. Okay, because dollar yen, we had seen 4 days of gains for the dollar against the yen. That's weighed off now because we're seeing slightly weaker dollar, 1.14132. This weaker dollar, though, of course, can all change. And we're going to talk about it again in a minute because we have a major event coming up on Wednesday, which could change the tone completely. But before we get into that, there's something else I want to share with you, which is just almost as exciting as that event happening tomorrow. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway,
join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
There we go. Also happening tomorrow, but actually an hour before the FOMC minutes, which I might cover actually tomorrow a little bit when we're live on air. But we, of course, got the next episode of Tixee Live Presents The Trading School. Don't forget, this is a weekly educational series every Wednesday at 6 p.m. UTC, and this is what's happening tomorrow. Tomorrow's subject, discussed by myself and my colleague Stefanos, will be understanding moving averages. Now, yes, this is a live broadcast, so it is live because Tixee Live is always live because live means live. So Tixee Live is live tomorrow, but it's not going to be on YouTube straight away. It goes on YouTube a couple of weeks later. So if you'd like to attend the event live, there's a link in the description below. So please click on the link, and I hope to see you tomorrow. Now, there is some other things I want to quickly talk about. Tesla. There's real growing concern at the moment about Tesla. Because actually it's trading at its lowest levels since November 2020. Now, it's got quite a few things going against it. One of them is the fact that if we do have lockdowns in China, it's going to greatly affect production because they have a major site in Shanghai, and they've already suffered a lot because of the production stops or production halts, shall I say, in China because of these lockdowns. So again, if this threat of more lockdowns is weighing on it. But the other thing which is weighing on it at the moment, more than pretty much anything else, is the general concern that Musk is too focused on Twitter to manage Tesla. He's too focused on Twitter. That is the thing that's the thing what they're really worrying. Well, hello there. What's your name? Good day to you. I hope you're well. Thank you for coming. I hope you're doing good. I hope you're doing well. I really do. Nice to see you. So it's trading as low since November 2020. But the real concern, like I say, is Musk is obsessed or too focused on Twitter to worry about his other businesses like SpaceX and Tesla. And of course, the firing at Twitter has continued. He fired a load of sales staff over the last 24 hours. And now that brings up the total number of staff to leave Twitter since Musk's, obviously takeover is now risen to 5,000 employees since his takeover. 5,000 employees since his takeover. But let's have a quick look at Tesla as well, actually, because like I said, there is a real general concern with Tesla at the moment. There really is. That for one, this China situation is not helping, but for second, the reasons is that obviously Musk is really, obsessed or focused on Twitter, and that's where we can see it at the moment. This is on a daily. It's absolutely. This is the thing. So really, this is the point. Brilliant point. It has affected the board, both on the board on Tesla. Okay, don't forget he got rid of the board at Twitter. He's the sole person who runs the roost. But it is concern. It's a big concern for the Tesla board. And like I say, it is really weighing on it. And then, like I said, it generally is concern for this company that Musk is too obsessed with Twitter. And I don't know. I found, hubris, whatever you call it, I guess. Ego. dictates everything, I guess. Very much so. I guess, like entrepreneurs, you have to have a big ego. So I guess, obviously, this is what he's thinking. But yeah, I mean, that's really, really valid points again. But yeah, this is really, really concerning. I mean, like I say, look, it's currently trading $167.75. Now, back in July, it was trading here. Look, here. And don't forget, around this time, this is when the whole Twitter, the Twitter mess started to happen. It was trading here, around about $665, now $167. And if you look at it on a monthly chart, now we've had 4 months of losses for Tesla. So there is genuine concern. And like I say, this is trading the lowest levels since November 2020. So there is a lot of concern in reference to this car manufacturer and Musk's attention elsewhere. So it'll be interesting to watch this as this continues and what other concerns comes out of the board. So that's the big thing. That's a really big thing. Other things happening this week in the market. We have Canadian retail sales today, German manufacturing PMI tomorrow, UK services PMI, US durable goods. But the main thing, which, like I say, can change everything in the mood of the market, is the FOMC minutes tomorrow. It's released at 7 p.m. UTC. It'd be really fascinating to see how much in these minutes will they most likely say. Be interesting, because don't forget, the market has a short-term memory. Don't forget, in the press conference for the Fed interest rate, everybody thought Powell initially was dovish. He then said, yes, okay, we might take into account lower increments of interest rate hikes, but we might have to raise interest rates higher than originally anticipated. It'd be interesting to see how much that is in the minutes. If it's in the minutes, then you could see the market potentially get really, really spooked once again. And like I said, that could change all the sentiment currently with the market at the moment. European equities as they currently stand. FTSE currently trading in the green, 0.97%. DAX currently trading in the green, 0.67%. And Eurostock 50 currently trading in the green, 0.36%. Don't forget, you can ask me questions anytime you wish, or say hello, like Cypress X and like Pascaline did, which I really, really appreciate it. And don't forget, if you think of a question later as well, you can put it in the comment section, either on Facebook and YouTube. I will see them and I will reply to them next time I go live on air, which will be later this afternoon at 3 p.m. UTC to cover the US session and see what's happening. Be interesting to see how Disney is reacting as well, because Bob Iger has recently stepped in, as you know, and in the last 24 hours, he's only just pointed the post yesterday. He's already fired one of his top execs, or basically one of the top execs is now leaving. So it'll be interesting to see that development as well. So yeah, to see how the US session handles that. Not a problem. If there is no questions, like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, find it interesting and useful, and you put up with me, however, a top enthusiasm for the markets, I simply cannot help. And give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.